So I'm going to take you guys through the market update. So hello everyone who is online with us. Shanoa Grove here, founder of Texas REIAs. Excited to be here with you guys tonight, and share with you a little bit about what's happening in the market right now. So every time we get together, we share an update of what is going on in the market. Because we're a little bit behind, I'm going to skip over a couple of the slides just to make sure that we can get to the commercial part of the presentation right away. I'll give you guys the summary right here. So this is the market update for last month. Overall, in Texas, last month sales were down 1%. The average price was up 0.3%, which all I can say is anything up in the market like we are in right now in terms of interest rates is huge progress, right? I'll go ahead and go down to the Houston numbers at the bottom. The sales last month were up 1.7%. The average price was up 2%. Year to date, we're about flat here in Houston, and the average price is up about 1.5%. I'm going to move very quickly through some of the next slides. So again, this is the roll-up of Texas slides. For those of you guys who want to take pictures, you're welcome to do that. I'll also go ahead and share with you the detail on what's happening in the Houston market. This is where all the cameras come out in Houston, right? So the average price last month up 2%, the median price up 1%. Days on market still going up, but 51 days is very normal. Anything below 60 is great. Last month, the sales were up 1.7% to almost 7,000 units here. We have a 4.4 month supply of inventory here in Houston versus last year we had a 3.4 month supply of inventory. What that means is if you look at the number of houses that have sold in the last 12 months, and if you divide that number by 12, you get the average number of houses that sell per month. And if you then take the total number of active listings, and you divide the total number of active listings by the number of houses that sell per month, then you get what's called a months of inventory report. Months of inventory, you see 4.4 months versus days on market, 51 days. 51 days is the days on market for the lucky ones that make it to the finish line and actually sell. But your overall competition, if you're trying to calculate what would be my holding costs, property taxes, cost of money, utilities, HOA, etc., then you need to really look at the months of inventory. So a lot of people miss that, especially new investors, because they're just looking at days on market and not considering that that's the best case scenario, and not also looking at what might be the worst case scenario, which is if you get picked last, your house gets picked last. Pending sales are up 23%, so that's a huge jump. We have seen some jumps in terms of the number of pending sales in some of the markets due to the reduction, that half-point reduction with the Fed funds rate. Active listings are up, so again, that's also in line with the months of inventory. And for those of you guys who are interested in commercial, you'll like to look at the leased numbers that are in this blue box here right on the right-hand side. So lease listings last month were up 9%. The average price for those listings up 2.2% at almost $2,400, and the number of leased listings out there up 11.6%. I'm going to show some of the other markets really quickly because I'm going to jump into the commercial update as we go through the presentation tonight as well. So for those of you guys who have friends or also do business in the DFW market, we have that. For those of you guys in the Austin market, we have that. And you guys can see some of these. You can see some of these on our site. It's funny, I wanted to roll it back for a moment because I saw some of you guys trying to take pictures of Phil's slides, and his just went a little bit too quickly. So I want to go ahead and share that one again. For those of you guys who have friends or are also investing in the San Antonio market, one of the more affordable markets that we have here. And then I'll hit some of what we call the major market drivers. So I know this is a little bit smaller font, but some of the major markets drivers, the way that we've organize this is, number one, the overall economy. And if you guys are taking pictures, I promise I'll stop right after the last build so you guys can take one shot of it and get it all together. But how's the overall economy doing? So most people would say we're still in the green, and we broke it out into consumer confidence, unemployment, job growth, stock market, and overall business cycle growth. And then how is the housing affordability? So that's broken out into interest rates and the house price trajectory. And then what does supply look like for us? Remember, we talked about days on market. We also talked about months of inventory, the number of active listings, and the amount of construction labor growth that we have that would even contribute to the housing supply. And then the housing demand, I've got one more bullet point to put up there so that you guys can hold your cameras just for another second. The number of closed sales that we have, pending sales, and the in-migration, the number of people that are moving here. And then I've saved the best for last, which is the wild card. Interest rate decreases and how often, how much, and how quickly. The election, right, which is a full 1 week away. And then the wars that are going on around the world and what's happening with inflation. So these are some of the market drivers that will affect us when it comes to real estate. Also want to go through what the forecast is for the rest of 2024. We are at the bottom of the market cycle. We think we are coming out of it as we see Fed Chairman Powell start to lower some of those interest rates. We do expect maybe one more interest rate decrease in Q4 of 2024 and expect hopefully some more in Q1 of 2025. Guys, we will never be at those 1%, 2%, and 3% interest rates probably ever again in our lifetime. If you guys are living in a house and you have a 1%, 2%, or 3% interest rate mortgage, expect to stay in that house forever. And some of you guys know what I'm talking about. So what's going to happen is you're going to be in that house, you're going to outgrow it, or you're going to want to make some changes. You're going to say, honey, remember when we talked about doing that kitchen renovation? Yeah, we can't go out and buy another house because we're never going to get this low of an interest rate, but let's go ahead and do that kitchen renovation. And honey, you're going to say, you know what? I think you're exactly right. And while we're doing that, why don't we go ahead and build our man cave? Because you know we've already talked about that. And let's kill two birds with one stone. And what's good for the goose is good for the gander, right? So these houses you will stay in for a very long time. Some of you guys who bought houses that were maybe below $500,000, some of you guys may turn those into rentals, but either way, you're going to be holding them for a long time. Because interest rates, while they will be dropping, will not be dropping to what we saw previously. We expect sales to start to rebound as those interest rates start to come up. Right now, for the 2024 sales forecast, we should be down by about 2% by the end of the year. Down 2% is, again, pretty good considering the fact that we've doubled interest rates, more than doubled interest rates in about a 2-year period. Prices are still doing relatively well here in Texas, primarily because we're still low on supply overall. So we expect that trend to continue. So guys, next I'm going to jump to a quick multifamily property update. So for those of you guys who are interested in commercial, by raise of hands, loud and proud, how many of you guys are interested in commercial? Louder and prouder. Okay, wow, okay, that looks like about half of the audience, And by raise of hands, loud and proud, for those of you guys who are only interested in residential. It's okay, that's how I made my fortune, right? And then I moved some of it into commercial. So you guys are all at the good place. So when it comes to multifamily, which is one of the most popular assets when it comes to commercial real estate, I wanted to put up an update from the National Association of Realtors, who does a commercial market update about every month, And they were looking at the top 10 areas with the strongest 12-month absorption. What do you guys see here? Who is represented on this chart? This is the interactive part, guys. Like literally, I can hear you breathing. It's okay, we can interact together. What do you see? I'm gonna have to borrow his cowboy hat. He's looking at me like, no you ain't. He gave me that look from the second he walked in the door today. Well, what are you seeing? Dallas has really high absorption. Houston has really high absorption. Austin has really high absorption. So Dallas almost 3x what they absorbed this same quarter, Q3 of 2023. For Houston, more or almost double what they absorbed the same time last year. Austin, same thing, just a little over double. So does that give you an idea of the health of a market? Yes and no, because what else? What's the other side of that you might want to know? And Phil Grove, you're going to have to keep it down. Please join us. Yes, yeah, please. Please join us in the meeting, please. So what's the other part of this coin? What's the other side that you want to be aware of and know? What was not absorbed? What does that mean? What does absorption rate mean? The number of units that were made available, that came on the market, and how many were leased. So it looks really good that we have very high absorption, right, in some of these different markets. But what do we want to know? How many were not absorbed? What's the total supply? Because have we built a lot of commercial multifamily over the last few years? Yes, we have. So what's another way to be able to find out maybe what was not absorbed is to look at the annual rent increases. So if you were just to look at the demand side and say, wow, we leased a lot more multifamily than what we did just a year ago, but then when you look at the demand side and you see that the rents are only up 0.3%, what do you know? That maybe we overbuilt a little. We're still positive, so that's the good news that I have to share with you today. But we're not like 3x positive or 20% higher when it comes to the rent because we built more than maybe what we needed. Now, there has been a shift away from home ownership. We've seen it a lot because our sales are down. Some people have said that we're down into the levels that we haven't seen since 2010. Some people have even referenced levels that we haven't seen since the 90s. When it comes to the number of houses that are being, the increase in the number of houses that are being bought. So we're seeing a shift away from home ownership due to some of those higher interest rates and a 90% increase in the 12-month absorption of properties in the U.S. to 470,000 units. Those are some big numbers, and I think those are going to continue even when we do see some of those interest rates go down, because I think those interest rates are going to need to go down by not just 50 basis points, but maybe 250 basis points to make people want to buy again. So this is a hot asset right now. Some of you guys are also maybe interested in office. So you'll see this office chart here is a little bit of a reverse of what we saw in the last chart. So it looks kind of the same style, but this is the areas with the largest vacancy rates. So San Francisco tops that. Why do you think San Francisco tops that? Expensive? Can I be frank with you? Because people are pooping in the streets. Okay, I'm sorry, that's what it is, right? And do people want to go back to work where that's happening? The answer is no, not really, right? So that's one of the reasons why we're seeing them, San Francisco at the top. Houston has been at the top since when? When did we start overbuilding office space in Houston? Does anybody in here remember when price per barrel was around $140 a barrel? Anybody in oil and gas in here? Okay, yeah. It was around $140 a barrel, like I want to say 2015, 2016, if I remember right. And right now it's in like the $80 a barrel range. Did we build a lot on that I-10 energy corridor? A lot of office space that's not been filled, right? So that's why Houston is up there. Dallas still up there too, so office, that is an asset class, a commercial asset class that what are we seeing people do in office space right now? What's the big trend in office space? What do they want to turn it into? Apartments, right? Residential, condos, because we have overbuilt that. In retail, the top 10 areas with the strongest net absorption in the last 12 months, what do you see? Dallas, Houston, Austin, right? So are we doing well in retail? The answer is yes. And then on the industrial side, for all of the packets that are being shipped from your home, from Amazon and everywhere else, where are we seeing the big movements there? Again, you see Dallas, Houston, Austin on there. So the major cities in in Texas are doing really well. And how many of you guys are also interested in self-storage? All right, let's do a quick look at that. So self-storage, the home sales drive self-storage demand. What happens when you're moving? A lot of times when you're moving, or even when you're upsizing or downsizing, you're moving stuff into storage, sometimes short term, right? While you're waiting for a house to get ready, or you're waiting to do a move or something like that. When there is a lot of movement in the housing market, we also see a lot of movement in the self-storage market. And now that some of the housing market has slowed down, sometimes we're seeing some of that self-storage slow down as well. So those fewer home sales have resulted in a lower demand of some of those self-storage and a lower dollar per square foot for the sales prices. So this isn't what they're being rented at. They're being rented at closer to about $16 a square foot, but this is what they're being sold at right now. So those are some of the changes that we're seeing in self-storage. Now, some of you guys may say, like, well, I don't know if I want to buy office. Is that the correct sentiment? And some of you guys may say, well, self-storage may be a little oversupplied. Is that the correct sentiment? Is it a problem that we might have an oversupply? It's a problem that we might have an oversupply. But what do we know about problems? What did Phil teach you about problems? Every problem has a... Oh, I got a chorus back there. That's awesome. But your chorus is wrong. Every problem has a price, right? And if you're buying it right, you can fix that problem for sure. So let's talk about the forecast for the rest of 2024 for the commercial. Higher interest rates have helped multifamily increase their absorption rates, and we built a lot of multifamily over the last few years. Many new multifamily units that were started or built in the 2020-22 when interest rates were low have created a little bit of an oversupply in some markets of multifamily. And that's one of the reasons why, even though we're absorbing much more because we're selling fewer houses, that the rents are mostly flat due to that oversupply. It's always not just one side, the demand, but it's also the other side, the supply. Office is still struggling with those higher vacancy rates, a trend that will probably continue. And I put here for the next 1 to 3 years, it literally could be the next 3 to 5 years, just because work from home is still going pretty strong, even though many places are being called back into the office. It's believed that some of the lower interest rates facilitate more moves and more need for storage. So we're not seeing that right now. And the self-storage rental rates are down in 24 of the top 30 markets by around 3 to 5%. So what was going up for many years is now starting to go down. 3 to 5%, not terrible, but 3 to 5% can be a big change in the amount of money that you're taking home as a commercial investor, as a syndicator. The pricing of these asset classes is a study in supply and demand, whether it is residential or whether it is commercial. And all of these assets can be great investments if they are bought at the right price, financed under the right terms, and managed well.